Do you know, traders make more profits trading in commodities futures than stocks? Commodities follow a seasonal trend and are much easier to forecast. They move with supply and demand. It requires much less work to keep up charts and calculations on commodities. With soybean, coffee, corn, you need 1 to 3 charts, and the same with other commodities. There are thousands of stocks listed on the New York Stock Exchange, and you must keep a separate chart on as many of them as you wish to forecast the trend. When you have a forecast made up for commodities, if you are right, you are sure to make money because all options follow the same trend. There are no cross-currents, as in stocks, with some stocks declining to new low levels and others making new highs. When trading commodities futures, there are no heavy interest charges as there are when long of stocks and no dividends to pay as when short of stocks. Dividends can be suddenly passed or declared, which will affect stock prices. This cannot happen to commodities. Shark cannot manipulate a commodity as they can a stock. Facts about commodities are generally known while many stocks are mystery. Some stocks are subject to false rumors. The stages of the business cycle tell more about the prices of the commodities than they do about stocks. Commodities are consumed and governed only by demand and supply. You can forecast tops and bottoms of commodities with greater certainty than of stocks. When you learn the rules for forecasting and trading in commodities, you will see that they never change, because there will always be wheat, corn, and cotton crops each year. These crops will be consumed, while stocks change and you have to study new stocks to keep up with changed conditions. Finally, most of notable speculators are the commodities traders. They have long record of success in making money in commodities.